contribution of the Nigerian manufacturing sector to value-added tax increased by 38.93% to 303.53 billion naira in 2024 compared to the 578.39 billion naira recorded in 2023. Welcome to Business Point, where we extract the Nigerian economy and the government policies. I am Kike Lomo Okere. According to the data from the National Bureau of Statistics, also shows that despite its decline output, the nation's manufacturing sector has remained the top contributor to VAT in the last 4 years. The manufacturing sector contributed to VAT in 2023 was 15.9%, that is 477.43 billion naira. In 2022, that is 19%, and 194.1 billion naira, that is 30.9% of total VAT collection. Specifically, in the fourth quarter of 2024, the manufacturing sector contributed 237.5 billion naira, representing 25.89% of total VAT collections. 395.34 billion naira in the third quarter of 2024, that is 22.21%, which is 183.89 billion naira or 11.78% in the second quarter of 2024, and 177.17 billion naira in the first quarter of 2024, that is 26.72%. The manufacturing sector accounted for 29.65% of the total VAT collected in the first quarter of 2023, 29.64% and in the second quarter of 2023, 251.3 billion naira, that is 26.51% in the third quarter of 2023, and 158.9 billion naira, that is 13.24% in the fourth quarter of 2023. In the first quarter of 2024, the sector contributed 193.93 billion naira, that is 32.84%. In second quarter of 2022, 118.8 billion naira, that is 33.08%. In the third quarter of 2022, 114.37 billion naira, that is 18.29%, and 131.3 billion naira, that is 32.17% in the fourth quarter of 2022. The manufacturing sector was also the top contributor with 49.41 billion naira in the first quarter of 2021, that is 9.95%. 49.41 billion naira, that is 8.76% in the second quarter of 2021. 91.2 billion naira, representing 30.9% of total VAT in the third quarter of 2021, and 102.9 billion naira, that is 30.69% in the fourth quarter of 2021. The National Bureau of Statistics data reveals that the manufacturing sector remains a critical sector for Nigerian economic growth, though it faces significant challenges. This issue results in increased production costs, limited profitability, and make Nigerian products less competitive in the global markets. The sector has also been impacted by the increase in fuel prices, which has raised logistic costs. The obstacle have caused several local and foreign-owned manufacturers to downsize or completely close their businesses, with their increased VAT liabilities despite the challenging economic environment, which has put extra pressure on the already strained sector. According to economic analysts, the increase in VAT payment is as a result of the rising price and currency devaluation rather than from the country expansion. The value of new listing of commercial papers in the first 7 months of 2025 more than double compared to the same period in 2024. Obligation that is issued by financial institutions and large corporations to finance their payroll, payable inventories and other short-term liabilities. At the end of July, the value of the new listing of the CP stood at 1.58 trillion naira. About the month of March and July saw a huge spike of plus 270.9% and plus 1,668% respectively. Combined, they accounted for 46% of the total 2025 new listing thus far. Decline in new CP listing were recorded in January and April 2025 as it dropped at 4.8% and 3.9% respectively. In terms of outstanding value of admitted CPs, the reports stated that while CP maturity totaled 112.94 billion naira at the end of July, the total outstanding of CP increased by 15.30%, that is 204.96 billion naira month on month to 1.54 trillion naira. Some of the businesses that tapped the commercial paper market in the first 7 months of this year were in the manufacturing and financial service sector. Analysts noted that issuance are like issuance. Augusto and Co. in its recently released banking sector report indicates that the prevailing high interest rate environment was a major driver, narrowing it to banking sector. The credit rating firm noted that withstanding the funding pressure from the prevailing high rate interest environment and the contradictory stance of the monetary authority, the industry remained liquid with a 59.4% in 2023. Liquid ratio, it is believed that the liquidity ratio will exceed 60% by fiscal year of 2025, supported by favorable albeit declining yield on treasury security. In view, banks will accelerate the adoption of innovative funding strategies as reflected in the uptick in commercial paper issuance to moderate the impact of the funding pressure in the first 7 months of 2025. Commercial papers amounting to circa of 750 billion naira were issued by various players. It also projected that CP issuance would increase, especially as the prevailing yields gradually moderate in the later part of the year. In 2024, the Monetary Policy Committee of the Central Bank of Nigeria raised the benchmark rate by cumulative 875 basis points to 27.50% and has adopted a more measured approach to monetary policy as it held the interest rates non-beggar in its half-year economic outlook. The great recalibration from shock to calm noted that evolving monetary dynamics indicates that while the CBN is holding rates steady to allow past tightening measures to filter through the economy, it continues to grapple with structural excessive liquidity and the impact of external sector pressure on domestic monetary condition. In the corporate sector, businesses are feeling the strain of the elevated interest rate environment. Commercial papers are a key funding source for Nigerian corporates, which have been quoted as steep discount rate of up to 25% for 270 days tenure, reflecting the heightened cost of borrowing. In response, many companies have increasingly turned to short-term instruments as a strategy to mitigate long-term funding costs and the interest rate risk. This shift is evident in the significant rise in CP's issuance, with the value of outstanding commercial papers on the FMDQ platform growing by over 157% to 1.3 trillion naira between January and May 2025. In contrast, the uptake of the longer-term instruments has remained subdued, with outstanding corporate bonding increasing by just 0.3% over the same period. The analyst projected that with the easing of inflation, which dropped to 21.88% in July, the CBN may begin to consider more accommodative policy stance to support domestic economic growth. Easing interest rates could help reduce borrowing costs, stimulate consumer spending, and encourage private sector investment, especially critical in an environment where access to credit remains constrained. However, despite temptation to pivot towards monetary easing, significant risk persists. Global commodity price volatility, lingering geopolitical tension, and domestic vulnerabilities such as insecurity and physical pressure could reignite inflationary trend. Furthermore, uncertainty around external factors including U.S. monetary policy direction, crude oil prices, and exchange rate movement means that the CBN may choose to caution data-dependent approach in the near term. Part of the report reveals that a moderate cut of 200 basis points is being anticipated before the end of the year, as the report reveals that such a move could reflect growing confidence in inflation containment effort, while also signaling support for broader economic recovery. With over 66 Nigerians enrolled on the bank verification number system, the Central Bank of Nigeria has introduced a customer bill of rights to safeguard bank users, highlighting their entitlements and duties in bid to strengthen protection, trust, and financial inclusion. With the bank verification number at 66.23 million as of July 2025, according to Nigeria Interbank Statement System, and a push to increase the number, the need to protect and enlighten bank customers about their rights and responsibility has been never been more pronounced. The BVN is an 11-digit number unique to each individual across banking industry. It is required to own and operate a bank account in Nigeria. The Central Bank of Nigeria, in bid to sensitize bank customers to their rights and responsibility, published the Bank Customers Bill of Rights. The document, unveiled at the recent held CBN Fair in Lagos, aimed to encourage members of the public to adopt alternative payment channel. The 12-page pamphlet, which is also available on the CBN's website, lists the rights and responsibility of the bank's customer. They include a right to be informed, a right to choose, a right to safety, a right to privacy and confidential, a right to redress good services, equality, and a right to a free monthly statement of account. The preface of the document described the customers as the most important person in the economy, and every business succeeds only when the customer is happy. This explains why the customer is regarded under the right to be informed. The central bank disclosed that the bank customers have the right to disclosure of information from the bank on products and services the bank offers. The information provided must be complete, relevant, and truthful. The bank customers' right to the safety requires a bank to guarantee all its customers a secure and conducive banking environment devoid of threat to their safety and health, while a bank customers has the right to privacy and confidential. That rights can be waived when the bank is required by law to make a disclosure, or also when the customer gives consent to the disclosure. Bank customers have the right to seek redress even up to Central Bank of Nigeria or the court when not satisfied with the way a matter is handled by the bank, including in the Bill of Rights in the right to equality regardless of the financial capability. The bill reads, this right requires that a customer be treated equally as other customers regardless of differences in financial standing, deposit balance, fiscal ability, age, gender, ethnicity, or creed. It is wrong for a bank to offer preferential treatment to some customers at the expense of other similar kinds of customers. However, banks may decide to differentiate customers on account of nature of the product customer purchase or subscribe to. In this case, some customers may benefit from the certain privilege which are feature of specific products or service. Without adequate knowledge, customers are bound to make ill-informed decisions, which may precipitate an avalanche of complaints from customers against their banks. It is generally agreed that sophistication in the banking industry has taxed the understanding of even people who are financially literate. The Nigerian Customs Service has made significant seizures of undeclared cash at various airports across the country between January and July 2025, totaling $2.209 million. The interception were made at the Murtala Mohammed International Airport in Lagos, Nnamdi Azikiwe International Airport in Abuja, and Malam Aminu Kano International Airport in Kano. An analysis of the various reports obtained from the service shows that in March, the NCS intercepted $1,154,900 and $135,900 in Saudi riyals at the Kano airport from a passenger arriving from Saudi Arabia. The undeclared funds were concealed in Park of Palm State. The suspects were arrested and the funds were handed over to Economic and Financial Commission, resulting in a court conviction and forfeiture to the federal government. Other notable interceptions include the in Abuja Airport, which was $193,000 in an undeclared cash hidden in a carton of yogurt, and inbound passengers arriving from Jeddah in March. At the Lagos Airport, $578,000 in falsely declared cash was intercepted from inbound passengers arriving from South Africa in March. The passenger declared $279,000 but had an additional $299 concealed in multiple packages at the Kano airport. Foreign currency totaling approximately 653.99 million naira, including $420,900 and 3,996,500 West African francs and 224,000 Central Africa francs and 5,825 pounds were intercepted from a suspect arriving from Saudi in July. Also, at the Lagos airport, an outbound passenger was intercepted with $29,000 but only declared $6,000, violating currency declaration requirement. Reacting to the development, a chieftain of the Association of Nigerian Licensed Custom Agents, Pius Ujumbunu, attributed the surge in undeclared cash seizures to fiscal policy issue. He advised the government to review its fiscal policy to encourage people to declare their cash. The Nigerian Customs Service has reiterated the importance of declaring cash when traveling. Travelers are required to declare any cash exceeding $10,000 or equivalent in other currency. The service has also provided forms at airline counter for passengers to make lawful declaration. Let's take a quick short break now. We will be right back. Don't go away. Stay with us. Welcome back. If you're just joining us, it's Business Point, where we extract the Nigerian economy and the government's policies. The Nigerian stock market deepened its bearish run last week, driven by sell pressure among the blue chip companies in almost all the sector of the market. As a result, the major performance indicator of the market, Nigerian Exchange Limited (NGX) all share fell by 2.51% to close at 141,004.14 points. Consequently, year-to-date return moderate to 36.9% from 40.52% recorded in the previous market week capitalization. Another major performance indicator, which reflects total value of listed share, also shared 2.29 trillion naira, that is minus 2.51% week on week, to close at 89.208 trillion naira. Market sentiment was dampened by sustained sell pressure in industrial goods. Heavyweight Dangote Cement, which declined minus